The headlines say AI is coming for software jobs and companies, but some people aren't buying it. Are small cap software firms at risk, or are they driving the next wave of innovation? We're going to break that all down for you and a whole lot more right now on UBS Trending. Hi, everybody, and welcome to UBS Trending. I'm Anthony Pastore. Thanks for joining me today. Randy Gewirtzman, who is from Barron Capital, he is here in the studio with me, and he runs a small cap growth equity strategy there. So, first of all, Randy, thanks for coming in. Good to see you.
It's good to see you too, Anthony.
I do want to get into the whole AI part of the story because it's really compelling and something we've been talking about since really the beginning of the year. But I wanted to get a sense from you. Let's kind of like lay out the small cap kind of landscape right now. How is it looking for you? And just so our audience knows, here in our Chief Investment Office, we do have a neutral view, obviously being selective with some names and some strategies in there. What's your view on small cap right now?
Yeah, sure. Being that I'm a small cap growth investor, I have a pretty positive view, but there's good elements that lead up to that conclusion. First, valuations are really low compared to where the S&P 500 is. Typically, you don't see that. Typically, small caps traded a 3 times multiple premium. And now they're trading at a slight discount. And that's been going on for about 4 years. That almost never happens. In fact, I don't think I've ever seen it happen in the last 25 years.
Wow.
So that's interesting. And another really interesting fact is that the category is very underallocated. So right now, less than 1% of all growth equity assets are in small cap growth. Typically, that's about 1.6% on average and as high as 2%. So there's potential that people could come in, and really start to reallocate when the economic environment looks a little better. And probably the last point that I'd make is, the growth is pretty good in the companies that we own. We typically look for 15% compounded returns on our investments, meaning either 15% top line or a combination of top line and margin expansion that leads to that. But a lot of our companies are growing 25%, 50%, or even 100% a year. There are sectors in the economy that are very, very exciting. And those include, obviously, AI, as we talked about, whether it's infrastructure or software related. But they could be defense, which clearly is very topical right now, and various sectors within healthcare, which is an area of our expertise as well.
Right. And before we get into the AI side of the story, something that obviously I know you're looking at all the time is, small caps are definitely much more susceptible to cyclicality. Obviously, we've got, this Iran conflict, so geopolitical tensions have certainly heightened. Kind of outside of that, you've got all these fears over private credit. There's just been so much going on this year. How do you deal with all of the things that are going on around the world and in the markets to feel the way you still feel about small caps?
Yeah, it's a great question. I mean, the interest rate environment looked like it was getting very, a positive for small cap and the economy in particular. We were starting to get lower inflation below 3%. Rates looked to be coming down, and there was a fight over whether the Fed should be cutting rates as opposed to raising rates. We're at the tail end of the cycle. Typically, that's really good for small caps. Now, obviously, we've had a couple of events in between.
Right.
We had tariffs, which for the most part, didn't take too much out of GDP, as we saw in hindsight. But clearly, the Supreme Court case throws a wrench into that. The Iran war and what's going on in AI are the two big factors that have really thrown things off track. And we're a little concerned about the consumer right now and inflation perking up a little bit. So there's a lot of ripples. What we're trying to do is stick to our long-term investing thesis.
Right.
And look at companies that are really well protected from a competitive advantage standpoint. And in 5 years, we'll have amazing free cash flow.
Right.
So that's what we're looking at.
Excellent. Thanks, Randy. And yeah, and us here too, and at UBS and CIO, we do have obviously a long-term view. We do think the Fed's going to still cut rates, but maybe we're kind of thinking later the year now, maybe September, December, possibly. Obviously, everything is in flux since we don't have knowledge about what might potentially happen with the Iran war, a lot of uncertainty.
Yeah,
So,
I would add one more thing. Is that
yeah, please.
Typically, we invest in companies that don't need funding. So less than 5% of what we own is cash flow negative, but we think they're funded through break even. The other companies don't need to raise capital.
Right. So no real leverage issues there.
Correct.
Right.
And typically, that's why people shy away from small cap in particular, because they're worried. These are companies that need funding, and when rates go up, that's a natural fear.
Absolutely, yeah. That's something that obviously we've talked about for you and I, and sitting in our various conversations about how a lot of small cap names are over levered and are very susceptible to rate changes. So let's go into the AI story, because that is
Great.
another really interesting part of what's going on in the small cap space. So just talk about, the headlines. Oh, AI is going to replace software. It's going to replace software jobs. What are your thoughts on that?
Yeah, I mean, it's terrifying because it's something brand new, and even the experts don't exactly know where AI is going to wind up going. So we started out with LLMs, which are these large language models
Yep.
that take a lot of information, pull it together, create weights, and then base their answers to people's questions based on those probabilistic weights and deterministic data. So deterministic data is actual answers with real information. And then probabilistic is when you don't have an actual answer, you use your model weights to interpolate a probabilistic answer to the question. Now, that's a key differentiator to many of the software companies we invest in, which we believe have deterministic data that can't be gotten to by some of the LLMs. Particularly cybersecurity type companies, right? There's so much network data that's being produced by all the endpoints, the things that are attached to your network, by your interconnections, and then by the usage of the next stage of AI, which is agentic AI. So agentic AI is LLM companies create harnesses which control how the models work and harness particular snippets of code that can then go into your network with privileges, right?
Yeah,
so
yeah.
they have their own passwords and everything, almost like people, and automate tasks. It's amazing, but if you think about it, there's a lot of cyber implications to that.
Yeah, and I love the idea that, obviously you look very specifically at each company's business structure, their bottom line, obviously their leverage, how much they're borrowing. So there's a lot of opportunity to be very selective in the space. And I like how you talk about this deterministic sort of software, like idea of like software. It's really compelling, and obviously something that investors should be keeping a keen eye on as they're looking towards growth and adding some diversity to their portfolio.
I was just going to say the babies are being thrown out with the bathwater
Right,
now.
of course.
So the entire industry has sold off, and it's hurt us the last couple of quarters.
Right.
Valuations in software right now are as low as they've been in 10, 15 years. And so if you can find the companies that are competitively advantaged, even in an era where rapid software development by anybody is democratized, it's going to be a really interesting time to invest, and we think there's a lot of profit to be made in that circumstance. There's a couple of other areas of software that I think are kind of interesting in terms of thinking about competitive advantage. One is regulated industries. So, for example, we own a healthcare company that is an FDA-approved AI algorithm for analyzing CT scans to determine what's going on in your coronary arteries. Do you have plaque buildup, right? Do you have blood flow issues? That is something that's FDA approved. It's not going to be developed by some kid, a 12-year-old kid, right, with vibe coding, and then just thrown up into the ether. So that's really interesting. And then you might have a network effect vertical software company. For example, we own a construction software company where the general contractor requires the subcontractors to be on the platform, because all the changes that are made from the computer-aided design all the way down to every component that goes into the construction, every piece of equipment, every material has to get changed on an ongoing basis, and the scheduling will change as well based on that, and the costing will change, so it goes back into the accounting systems. There's a community aspect to this that, again, is not going to be developed. And let's forget all the marketing that has to get done and everything, and the integration that has to get done in a complex corporate environment. There's a lot of different ways that existing software companies are truly competitive advantage, even in this environment. And so, you know how markets get. I mean, you get a theme, people get scared, they sell. And look, we've got private equity out there there's a lot of private debt, I should say, out there that is funding some software companies people are very concerned about. So it's easy for the short sellers to kind of shoot at for now. But I think it might have been overdone.
Unfortunately, we're out of time, Randy, but I really appreciate you coming through. Love to have you back again. I think there's a lot of opportunity. Like, as you said, valuations right now are pretty low, so there's an opportunity depending on how selective you want to be in the space. But good to see you, Randy. Thanks
That'd be
for
great.
coming
Thanks,
by.
Anthony.
Absolutely.
Always good to talk to you.
Great. And again, Randy Grossman from Barron Capital. Thanks again for joining us. And for more information on everything coming out of our Chief Investment Office and our great partners like Barron, make sure to check out our website at ubs.com/views. Plus, you can follow us on social media. We're on LinkedIn and Facebook. Plus, we have a dedicated channel for the studio on Instagram. Follow us at UBS Trending. And as always, if you have any questions about what Randy and I spoke about today, I'd encourage you to continue this conversation with your financial advisor. Until next time, I'm Anthony Pastore. We wish you a great rest of your day, and remember to keep your eyes on what's trending. We'll see you soon, everybody. Thanks.